Hello, everyone. Today is Friday, October 28th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 655, presented by The Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. If you're brand new to this video series, first off, thanks for joining us. Thanks for tuning in. Here's how these videos work. We break up our analysis into two parts. In part one, we look at the numbers. We pick apart things that stand out, look different, interesting, or notable from the week. And then in part two, we jump into the charts and we take a detailed, close look at price action. We look at those broad market trends and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the takeaways and some of what we're going to discuss in this week's episode. So top of the list here, earnings. We had basically the busiest week for earnings. We had all the mega cap tech reports out this week and a lot of other companies, of course. And the earnings numbers were, generally speaking, just bad. I mean, there's not much of a sugarcoating to it. Earnings expectations have been ratcheted down coming into this season, basically into this quarter. And, a lot of the numbers were still, coming in line or below those downward expectations. So we saw some of the slowest growth that we've seen in years for many companies. But if we look at what price action has done in spite of that, we moved higher throughout the week. And that's why, this episode, kind of tongue in cheek, was called Stocks Continue to Rally Despite Ugly Earnings, because last week we had stocks rally higher despite broken credit markets and yields going higher. So there's a message that the market is saying here. And this is, speaks to, at least in the short term, is that the market is either has discounted enough of earnings and interest rates, or it's looking past that to something else. But the bottom line is the market is climbing this wall of worry here. We're going to get a lot more into this in part two. Dow Jones on pace for the best month in decades. This is not years. This is not the last 18 months. This is decades that the Dow Jones is putting in its best returns for October. Again, the month's not over, so knock on wood, we don't have an 87 style crash on Monday, but that is the last day of the month, so we'll see how everything wraps up on Monday. Chinese markets, that's a big story this week. I mean, they really started to decouple here and break to new lows, and obviously there were a lot of catalysts to make that happen. We're going to talk about that in part two. VIX term structure looking one of the best it has all year, and that's debatable. It's at least one of the best looks for volatility that we've seen. Short-term quant system that we have is aggressively short. So again, a lot of bullish positioning there, but our short-term quant system is aggressively short right now. And then we're going to look at some new opportunities to play this rally in the second half of this video. So let's dive right in. We got lots to talk about today. These are the numbers. 1 week on the right-hand side here, everything was green. Everything was pretty strongly green. Russell 2000, top of the list here, 6%, really outperforming on a relative basis. And then look at the 1 month numbers, everything also in the green. Russell 2000, double digits there at 11%. Now, if we look at our stock market trends, we haven't got a transition up here on the intermediate basis just yet. So we still have declining 50 SMA and 200 SMA. So the kind of intermediate and long-term trends, primary trend, long-term trends are still down. Short-term trends, everything's up, and the 10 SMA is rising. So we've got just this short-term trending momentum upward, but we don't have the wind at our back on those longer-term simple moving averages. Now, if we take a look at volatility environment, very positive this week. We got the VIX cracking below 30. That is one thing that we've been calling for, looking for, waiting for the bull case, to support the bull case. And we're back at 26 for the S&P VIX volatility index. That is nice. That is what you want to see if you want to be essentially long this market. But the key is you want to stay there. You don't want to just kind of come down here, touch it for a day, and then just rip back above 30. We're going to talk a lot more about this. Nasdaq vol 31, Russell vol 30, and down 4 points on the week. Now, this is the VIX term structure, pulling this from VIX Central. Give them a follow there on Twitter. And so this is a snapshot here. It's a little bit delayed, but generally speaking, a snapshot here of the VIX term structure. And you can see, again, it's not perfect, but it looks a heck of a lot healthier than it has in most other days this year. You can see kind of the nice upward slope here as we price volatility higher into the future. And so, again, not perfect, but 26 again in December, and then it starts to ratchet up there as we get into the new year. Now, 52-week highs and lows, something we track very closely. A couple of noticeable things here. First off, the ratio is getting tighter, so we're not seeing as many stocks hitting 52-week lows as we have been for, again, most of this year. And we are starting to get a slight uptick here, an increase in the stocks hitting the number of highs making 52-week, number of stocks hitting 52-week highs. We're getting into the upper double digits here, so 66, 70, 82, 76. Probably higher number here on Friday. Again, this is a preliminary number, and these numbers are usually always just kind of lower when I take the snapshot. So we're getting a gradual increase here. That is constructive, although we're still getting a good number of lows. So we haven't quite balanced out, flipped up yet, but we're getting close. So this is something, again, we're going to keep an eye on every single week, of course. And it feels like if we can get more positive performing price action next week, maybe that is when we start to flip and get this ratio positive. Now, back to earnings season. So this is one of the key takeaways here at top of the list bullet point. Earnings, again, have basically been revised down and are still pointing to some of the slowest readings that we've seen in this bull market, in this latest bull market. So if we look at Charlie Bolello here, so pull a lot of his stats, he's really just good at framing out the important stats and high level picture on lots of different things. He posts this on the big sort of mega cap tech companies, and we've got the slowest in company history and the slowest since 2020. And so you can see here, if we look at the carroted stocks, Google, this is the slowest revenue growth in the company's history. Microsoft, the slowest in the company's history. So I'm sorry, I messed that up. Netflix is the slowest in history. Meta is the slowest in history. Google and Microsoft is the slowest since 2020. So we've seen, again, just these numbers come down to these low single digits here, but the market still rallies in the face of it. Tesla, of course, here is just kind of standing out by itself, up 56%. It's kind of the former darling here, just like lots of these companies were. Now, Dow Jones, I want to speak to the Dow Jones. We're going to speak more about the Dow Jones in part 2 of this, but this is a snapshot here of the monthly returns. And so I'm looking at just the diamonds, the DIA, tracking the Dow Jones Industrial Average ETF. And you can see it's on pace right now, up approximately 14% for the month of October. If we go all the way back to 1998, it is the fastest, highest reading that we can see on this chart. We would have to go to the index here to go back even further and see when this was last achieved. But needless to say, it is a very, very strong month here for the Dow Jones, a month that, could be the bottom for the Dow, right? This is where you start to get these big increased violent moves in the opposite direction. These often can mark the bottoms, not calling the bottom, but just saying this looks like something. If we look back in hindsight, months from now, years from now, we say, oh yes, obviously, yep, that's where the Dow Jones bottomed. So this, I think, was notable. And, these stats are always so nice to see in hindsight, but I want to play a clip here real quick to show how these moves start, to show how you can kind of put the building blocks together to uncover important moves before they turn into, record stats, so to speak. Okay, so we're going to play a clip here from just 2 weeks ago in our Stock Market Weekly extended clip when we were analyzing price action while the Dow Jones basically turned around in real time, a trade that I personally took, and then just the building blocks of how we sort of got here. So take a listen to this clip from 2 weeks ago. On further inspection here recently, I think there's some more things to like about the Dow Jones. And if we look at this price action, this looks just at a glance here much better than everything else. And again, there's reasons why it should, just given the composition of the stocks, but we're going to just leave that aside and analyze price action. The Dow Jones was interesting because it was, actually one of the first to start to break down from the June lows here. It started to leg down and make new lows, one of the earliest. But when we look at now the near-term price action here, There's a couple of things to notice. First off, this gap down on Thursday did not break the September lows. Okay, so we've just got a different structure here. Again, if you look at September lows for S&P 500, they're up here. If you look at the September lows for Nasdaq, they're up here, right? For Dow Jones, they were here, we retested them, and then we put in this big engulfing bar. Look at the magnitude of the give back today. We're still in the top 25, 30% on the Dow Jones. Look at the MACD, has just much more clear sort of positive divergence going on here, right? So for me, this index is much more interesting. In fact, I took a position in it. I have a long position in it. It is not a high conviction bet for me. It is not a large position either, but it is a position. And I do have some long exposure to the diamonds here. I bought some on Thursday. That's the building block. That's if you want to be early, if you're a trader that doesn't have all the confirmation, that is how we can put the pieces together. It's why we do these videos every single week, is to stay on top of the moves as they are developing. And we, of course, never know if a move is going to follow through in the direction we think it may, but we need to be there. We need to be present to look at that opportunity, look at the evidence, and make those informed decisions. So hopefully that is helpful. Hopefully it shows you, why it's important to be a subscriber to Stock Market Weekly. Shameless plug right there, is because we do look at those trade ideas and start to uncover those important moves in part 2 when we start to look at that price action. So let's move on here. So if we take a look at sector performance now, you can see that we've got the industrials leading the charge here, and that's something that's showing up on lots of our scans. Lots of stocks here breaking to either new recent highs or just seeing some big moves out of industrials. Utilities in the second spot this week, 6.5%. Remember, they were crushed over the past few weeks. Financials in the third spot, up 6%. On the downside, communication services, thanks earnings to that, Google and the like, bringing this down. Consumer discretionary 1.8%, Amazon, and then energy finally cooling off a little bit, but take a look at the 24% month there over the past 30 days, 21 trading days. Now, if we take a look at IBD industry ranks, so this is again our featured sponsor here, IBD, and we're looking at their digital industry ranking lists, which updates every single day. There hasn't been a whole lot of change here in this list. It's still very dominated by energy and oil and gas. So we've got retail, wholesaler, auto parts here. This jumped pretty dramatically though. So this is almost the number 4 now IBD ranked industry. Just a few weeks ago, this was down in the 40s and 50s in terms of its ranking. So this has really shot up here, some big improvement. So certainly keep an eye and closer inspection onto this. And then, we've got a couple of others creeping in the 11 to 20th spot that is starting to move up pretty quickly. So it seems like oil and gas here is going to start to get replaced in the coming weeks if we continue to see this kind of risk on industrial and tech rally out there. Now, in terms of 10-day correlations, not a whole lot of change here. So again, things are still moving pretty tightly correlated to risk on, risk off. That King dollar is still just very inversely strongly correlated to risk assets, broadly speaking. I will say, if you're crypto traders out there, Bitcoin starting to very tightly correlate with risk assets here. So essentially you're getting a nice risk on rally in a lot of at least the primary cryptocurrencies, and then some of the, lower caps as well. So you're seeing some good correlation there. And again, very much moving inverse to what the dollar is doing. Now, if we take a look at Treasury yields, it's also a bright spot here for the market. So not only is the VIX starting to break down, and not only is the dollar starting to soften up a little bit, but we're getting Treasury yields, right? All these things in harmony kind of work together, and they're starting to finally cool off a little bit. You can see the 10-year yield now flirting with basically a 4% yield. It's still extremely high, but it is starting to cool off a little bit. That is, again, letting off the pressure, I think, a little bit for the market to sustain this rally. Finally here, if we take a look at dollar and commodity performance, you can see Bitcoin top of the list here, up 5% this week. Natural gas also rebounding this week. It was, remember, just totally obliterated last week. So you can see, again, 1 month numbers, 20% down. Crude oil, nice rally there as well, 3% up. And then everything else here in terms of metals, and then agriculture here was down on the week, flat to down a few percent. Now, here's our trading system positioning here. It's actually very defensive still, and in fact, short. So again, Merlin here is our longer term trading systems, our kind of position trading, looking for holds around 6 to 7 weeks or so. And you can see that this is still just mostly cash, 2% invested, and still kind of just waiting and watching right here. But it's getting interested in the market. As this rally continues to show some strength and commitment, I would expect Merlin to start to ratchet up its long exposure. But take a look at Lamerick here. So this is our short term long short system. It is 100% short this market. So it is essentially its max allowed short is where it is currently positioned right now. And unfortunately for Lamerick here, it has been early. So it has been building this position throughout the week. And of course, we had a strong close to the week. So it's been feeling some pain. It got into the short positions a little bit early this week. It filled most of its boat, though, about Thursday and Friday. So we'll see how this fares next week. Again, it's very tactical. Average hold time here is just a couple of days. So it could be out of this by Tuesday or Monday of next week. And it could be, back to flat or heavy cash. So just keep that in mind. Don't try and follow anything blindly, because these updates coming once a week are going to be too infrequent for you to act on, and they are targeting specific stocks. So it's not just the indices, so to speak. And you can see our trade risk index here, which is basically a blend of both trading systems, 47% short right now. So again, when you take these systems in aggregate, which is how I like to allocate across them, it is not 100% short everything right now. It is 50% cash and tilted certainly pretty strongly as it can get to the short side. So if you want to learn more about these trading systems, check out that $1 trial available. It's popping on the top right of your screen. And that is it for part 1. So if you do want to continue on to part 2, we're going to continue on for another 10-15 minutes. We're going to jump into some charts, analyze price action, look at some new trade ideas. Then go to thetraderist.com/SMW. You can buy this episode. If you just want to hear this episode, that's fine. $5 gets you the full access, or you can subscribe to our monthly and get you access to the 4 episodes. A little bit of a discount, $15 a month. And with that, I hope this video was very helpful for you. Hope you had a good week trading out there. And thanks so much for tuning in. We'll be back again on Friday. And for those continuing on, we'll see you here in just a second.